And we're live.
Good morning. My name is Billy Merritt, and every single Monday, I bring you a show called the Monday Morning Money Show. And here it is, Monday, March the 1st, 2021. Welcome to the show. Thank you, Smith, for the cool banner we have behind us. If you like my banner, if you like the show, or if you don't like the show, please like or dislike. Give me a thumbs up or a thumbs down. I would appreciate the participation. This show is all about you. There is some knowledge out there that will help you acquire money. Because let me tell you something. Money is very, very important. I had a conversation with my barber last week. I got a haircut, and we got into a little bit of a heated debate. He said money doesn't make you happy. I said, who ever told you that money does make you happy? Money's not about happiness. Money is about solving financial problems. Money is about securing your financial future. Money is about handling your business. You got to have money. Money is very important. Money does not make you happy. Nobody ever said that. I definitely haven't. Smith, have you ever heard it said money will make you happy? If you get lots and lots of money, you'll be happy.
I don't think I've heard that said.
I've never heard that. That's not what it's about. But here's the thing. People who say money won't make you happy are really just talking because they've had a bad experience trying to acquire some money. That's my opinion. So let me know what you think about that. But here's another lie about money. So first of all, it is a lie that money will make you happy. Of course, that's a lie. It's also a lie that being broke will make you happy. So it makes just as much sense to say money won't make you happy as it does being broke won't make you happy. Of course, both of those are true. They're both equally true, possibly. I mean, I think you possibly might be a little bit happier if you have more money, unless you're just an unhappy person. I think money will bring out your true feelings. Okay. So if you're an unhappy person, when you have a lot of money, you have nothing else to blame it on. Right. True. So you got to work on yourself then. You need to work on yourself anyway. This is just about working on your money. I'm not trying to help you with anything else. So let me explain to you something, another lie that you need to get out of your head. You've heard it said, it takes money to make money. Smith, Miss, have you heard that said before?
All the time.
Have any of you guys watching ever heard it said, it takes money to make money? Be honest with me. Do you believe that? Smith, do you believe that it takes money to make money?
I think it gives you more potential. I don't think it takes money to make money.
It doesn't. And once you have some money, you can put it to work. But right. If it takes money to make money, you'd never make money in the first place. For instance, it takes a willingness to go to work to make money, for one thing. You can make money that way, right? I think what people say, tell me what you think they mean when they say it takes money to make money. If somebody has an opinion on that, when somebody says it takes money to make money, what do you think they're talking about? I personally think they're just talking to hear themselves talk. Like, before I started my business, I didn't have any money. It doesn't take, if I had to have money to create my business, I would not have had a business. How much money do you think it takes to create a business?
$50 to $100.
$50 to $100. You got your business. You know,
that's pretty much your LLC fees, right?
Probably. I think I probably paid a little bit more than that, but I mean, before, but I started my business before I had an LLC.
Right.
It takes an idea to make money. It takes an idea plus something way more important than the idea, because there's unlimited great ideas out there. Have you ever had an idea? If you're watching, be honest with me. Have you ever had an idea that was a great idea, and then later you saw somebody else capitalizing on that idea? I'm sure if you're being honest with you. What about you, Smith? Have you ever had an idea You said, man, that's a great idea. And then you've seen somebody else doing that idea.
For sure. And I should have acted instead of thinking about it.
You know, so basically, my mentor told me this, and I didn't understand it at the time, but now I totally understand it. It doesn't take money to make money. It takes courage to make money. Because it's scary. It's scary starting a business. It's scary investing what little bit of money you do have going. It's scary going all in on a business. And if you're not willing to go all in on a business, then you probably don't have what it takes. Now, sure, not to be massively successful, right? So, you know, you can have a little bit of success by playing it safe and using just a little bit of money to invest into your business, to invest into your idea, or to invest into your stock portfolio. We talk about that all the time. And Russ Story was supposed to be on the show today. I think he's got tied up with a client, or he's having to. So, you know, when you are a stock broker and you have hundreds of clients that you're responsible for their investment money, you're responsible for their income, you're responsible for helping them grow their wealth, and the market drops $650 on Friday.
Yeah, he's been pretty busy, I imagine.
And then today the market shoots up $650, something like that. I'm not sure. You know, I know it went down a lot on Friday. This morning it's back up a lot. So he's pretty busy. May have to catch him after 4 p.m. tomorrow. Let's make sure we reschedule that.
He's calling me.
Is that Russ? Tell him to come on. See what he says. Smith's talking to Russ Story. So I would love to get Russ on here today, if at all possible.
I reckon so, man. Are you going to be free for today, or do we need to reschedule?
So let me tell you this. When I'm telling you that it doesn't take money to make money, that it takes courage, what I mean is you have to be willing to go all in with your effort, give it everything it takes, knowing that you very well might fail. Is he coming?
He's on the way.
Sweet. So what I would like to hear is a success story. So anybody that's watching who's had a success story going all in, send me a message about it. I would love to share your story with people that need to hear that, because another one of my mentors told me that you need to share your successes with people, because it's very challenging to thrive in business. There's a lot of obstacles. There's a lot of competition. There's a lot of fees. There's a lot of costs. There's a lot of headaches. There's a lot of interruptions. There's a lot of speed bumps. There's a lot of reasons why you will fail in business. That's the reality. And that's why so few people start, is because there's so many obstacles. You have to be willing to take on those obstacles, take on the negativity, take on the speed bumps, take on the challenges, take on the haters, take on the people trying to tear you down. You have to be able to take on all them, remain positive, and persist and endure. So Smith, do we have an ETA on Russ Story?
I think he's just driving over here from there.
So he doesn't live. He works one block over. He should probably just walk over. If he's driving over, it's going to take him longer to park than it does to actually get in here. Hey, go ahead and put Russ's name back on the screen. Can you do that without?
Sure.
You can?
Yes, sir.
We're going to have him already right here. This is Russ's microphone right there.
I'm wondering if I can edit this description on the fly.
Do you remember that? You remember that interview that, hey, will y'all please turn the air conditioner on in there too? You remember that interview that Clint Eastwood did with the empty chair?
I don't think I've seen that. I feel like I need to.
All right, Russ, we're having a discussion on money and courage today. And what's your take on it, Russ? It's going to be a little bit of a delayed answer, I think. Hey, it's going to be worth sticking around for. We got all day. Russ is about to walk in. Smith, will you check on the air conditioner? It feels like it's about 99 degrees in here.
Sure thing.
And again, if anybody's watching who would be willing to comment and would like a shout out, or who would like to give us some advice on if it takes money to make money or not, then reach out to us. Comment. You can private message me, or you can leave a comment right here on the screen. Did you have any
money saving tips?
Oh, you want a money saving tip?
Well, I was wondering if that was what you were going for. Yeah.
Did you have any tabs pulled up that you wanted, like for Russ or anything, or you just had your?
Oh, I was just gonna go see if I could edit the description real quick, get him back in there.
Gotcha,
sir.
You did have a money saving tip though, Smith?
Yeah, and this will vary depending on your lifestyle, but I think it'll apply to a lot of people. And this one is audit your paid subscriptions. You could do this annually. I'd say probably better off doing it monthly. You know, with as many video services as there are.
You know, is Paul Sullivan watching? I hope he is, because I'm gonna tell you and Paul something right now. I normally disagree with everything you say about your money saving tips.
Right. I believe it.
I don't think you guys have very good money saving tips. But now that's a good one. Audit your paid subscriptions, because that is 100% wasted money. I'll give you an example of stupidity, and I'm pointing at myself. Okay. I have an Amazon Prime membership, and April has an Amazon Prime membership, and you can have the family. Amazon Prime, I think you can like add a family member for nothing, if I'm not mistaken.
I think you're right.
Come on in, Russ. I hear him coming.
Awesome.
Big news. We got a secret guest coming in. Come on in, boss man. Pretty good. You're on this side over here. Good, man. How you feeling?
Good. I feel pretty good.
Good deal. Turn the air conditioner on and everything for you. It's beautiful. Thank you. All right. So Smith and I, we had a discussion. We had some speculation. Speaking of speculating, a lot of speculating going on in the market right now, isn't it? All right. So I think we did a pretty decent job introducing Russ. But Russ Story, tell us, according to Russ, who is Russ Story?
Man, I'm a financial advisor. I've been doing this for 27 years almost. You know, we've got clients right now. We're in
just a little
11 states, I think it is.
11 states. So you're registered to, or I guess it's called registered certified.
I'm a registered investment advisor representative. Okay. We're full service financial advisory firm. We manage a lot of money for clients. We provide advice for fees. That's kind of what we do.
For how long you been doing it?
Well, this is year 27.
Year 27, and has your customer base, has it grown over the years?
Oh yeah.
Okay. Yeah. So in 27 years, your list of clients has grown.
Mm-hmm. We've had a pretty good growth spurt, if that's what you want to call it. Mm-hmm. But it's like a lot of things. We try to help our clients grow their wealth methodically, and we have strategies to help them do that. We're not all about get rich quick. It takes time and hard work. But the other thing is our gross revenues to us as a firm, which doesn't matter to my clients, but man, we're probably up 40-50% from where we were a year ago. So.
I think that's a sign though of success. That was what I was getting at. You know, if I was talking to a financial advisor who had the same revenue, or was managing the same money today as he was 20 years ago, that would be to me, that would be a negative sign. You know, I want to, when you talk about stocks, you talk about companies, you talk about growth. I mean, you need to be able to, if you can't look at your advisor as a sign of the way, if he's not doing it right, if his clients aren't growing, maybe his strategies aren't that good as well. That's kind of my take on it.
Well, I don't think any success, as you know, Billy, is it goes in a straight line, but that line needs to keep trending forward. And, I think we're still around because we've learned a thing or two, and we're going to continue to grow. I know that, I've got a lot to learn. I think we all do. The more that I am able to understand and learn about investments and the markets, the more I realize how much I don't know.
Yep.
And
But
I think that's
I totally understand what you're saying, but at the same time, you are an expert. I've talked with Smith and a lot of guests on this show, and we love talking about Robinhood apps and we love talking about the Reddit, Raiders and Bitcoin, and it's exciting.
It is.
It's exciting, and we speculate. But now here's the most important part of the show right here. Okay, I want to really explain to my people, because people look to us for advice sometimes, and my expertise is very narrow, so I can give you expert advice. I've given Russ expert advice. I advise Russ when it comes to social media marketing.
That's right.
A little bit of sales. He's a sales expert as well, but I can still advise in the areas of sales and marketing,
right?
And a little bit of software, things like that. When this show is about my opinions, and we have fun when we talk about Bitcoin trading, and I flat out tell them, Russ, it's a bad idea to trade and to trade stocks, unless there are very limited people in the world who can actually trade stocks and make a living, much less get rich doing it. Can you explain what speculating and what real strategy is versus what we talk about on here when we're talking about having fun? It's really a bad idea. I mean, I shouldn't even talk about.
I think you do a great job covering it. I mean, it's a challenge because, everybody wants to talk about it. Believe me, but I'm a real boring guy. Okay. I mean, I'm a boring guy. What I mean by that is, if you think, hey, Russ, what do you think about Bitcoin? I don't do it.
Right.
Okay.
Right.
What do you think about, I don't do, there's a lot of things. Why don't you do it? I mean, people making money. Well, that's true. There's a Bitcoin today. There's always some really exciting place where you can roll the dice and make a few bucks for a period of time. But ultimately, I have to understand Peter Lynch, one of the best long-term. Peter Lynch, one of the best money managers that I've ever known about. And he managed a fund called Fidelity Magellan Fund back in the 90s. And he used to always say, know what you own and know why you own it. Mm-hmm. So my job for my clients is to help my clients in an investment portfolio, is to accumulate opportunities, but don't chase trends.
Right.
Okay. So I've said that over and over. Let's accumulate opportunities in that investment portfolio in a well thought out, diversified. Let's use, common sense parts to put it together. And then let's because my clients typically want me to do two things for them. Okay. They want me to make them as much money as I can and want me to make hay while the sun shines, but don't lose my money.
Right. That's so hard. Yeah. Smith, that's impossible for you and me. And a lot of the people that we have on here, Joey commented earlier, and we have money in the market, but unless you have a real strategy, it's very hard. It's hard to make money and at the same time not lose money.
Well, and right now, I think from a speculative standpoint, there's a lot of people looking for the next Bitcoin. They're looking for that next, and there'll always be, and it's my opinion. Okay, I've been doing this for a while. I didn't just start this yesterday, but I think what happens, and we need to understand, there'll always be a JDS uniphase back in the 90s. Okay. There'll always be some hot stock going into 2008. There'll be a hot stock going into these market really corrections or whatever. And there'll be some, Russ, why didn't we have XYZ? Well, Russ don't have XYZ. I didn't have Enron. I didn't have my clients in Enron. My clients had no experience. You know why? Because the folks that I understand and the folks that I get advice from to help me advise my clients and manage the portfolios said, we can't understand what they're doing.
Right.
Okay, so we stayed away from it. Now, a lot of people, you could say, well, a lot of people made money and lost billions, and that's true. But my point is, if I can't understand what we own and why we own it, I'm talking about my clients, then we ain't gonna buy it.
Right.
I'm not gonna expose them to it. And not saying, well, Russ, you just don't. Well, it's fine. I mean, there's always something fun out here to try to change. But I think where people really make a mistake sometimes is when we confuse, fun, the horse races to investments in serious
That's
capital.
right. It's two different things.
It's really got to be. You got to say, and if you don't, you can always look back and say, man, if we'd just done this, if we'd have done that, you can play that game every day for the rest of your life. And I don't understand. It's a naive approach to beating yourself over the head that you'll never win.
You can't win it.
You can't win it.
That's the point I want people to understand. There's nothing wrong if you're a disciplined person and you have a TD Ameritrade and you have a Robinhood and you can pick. I think this is a winning strategy. You tell me if I'm wrong. If you have discipline to pick you 5 to 10 companies that you do some research on and you think they'll be around in 5 years and in 10 years and in 15 years and in 20 years, they'll be more valuable in 5 and 10 and 15 years.
That's
and
right.
you have the discipline to put money into those companies, buy those stocks every month or every week or every 6 months, whatever it is. And you can have the discipline to do that when they're going down and when they're going up, then you can be safe and not lose your money. But you cannot get on. You can't watch MSNBC or whatever those networks are and think that you can chase those trends. I'm gonna tell you what I did. I chased the Bitcoin trend and lost. Right. I chased the Tesla trend and lost.
Yeah.
I even chased now I've been winning for Facebook because I've been a believer in Facebook since 2008. But
right.
But that's I've lost so many more things thinking I'm smart. Whereas at the same time, in the few years that I've been, and this is not a show about Russ's, but by all means, I advise that you get with Russ if you have some investments or want to increase your wealth. But in the few years that I've been investing with you, that you've been managing my portfolio of my long-term wealth strategy is story wealth strategy, right? So, and not that it never goes down, but on every time I log in there, that trend line's going up. You know what I'm saying? And one day I got nervous and I said, man, what's gonna happen with all the, with all this? I think it's gonna fall. And I just logged into my Net Investors account that you manage, and we were at 60% cash. Now that's when you talk about investing and you hear all the chatter about cash is trash and you need to be in real estate, you need to be in stocks, and then the dollar's weakening, but we have 60% cash. Explain why that is and some of the tools that you use.
Well, one of the things that we do, and you can one of the things you've learned, and it's more of it's a science and an art as well. I think my clients are paying me to do two things. But number one, probably really and truly, is don't lose my money.
Right.
Okay. That's really, if you say, say don't lose my money and grow my money. I would argue that my client, number one is don't lose my money. Mm-hmm. Okay. So what we try to do is put in place some risk management metrics, and I call them overlays on top of everything that we do. One of the things that we look at is something called, I'll just kind of throw some ideas, but we've got 4 particular things that we use to manage risk. One is something called, I call it Bull Sentiment Index, BSI. Okay. Bull Sentiment Index is pretty cool. A lot of people use it as a buy indicator, and I learned a long time ago sitting at a steakhouse with a guy who was managed billions of dollars for JP Morgan, one of their funds. And he was talking about different things, and I'm listening to him because he's got a little drink in him, and he's telling me. One of the things I picked up from him was how important Bull Sentiment Index was as a risk management issue. Here's the way it works. Let's say that Bull Sentiment Index, and I'm being kind of quick here, but to say the quick and dirty way of looking at it is you got 10 high dollar analysts and research firms are looking at a company. Say it's, I don't know, Walmart, whatever, it can be anything. Okay. And they're looking at, and 10 out of 10 say, man, we think this is a good buy. It's a strong buy on this investment. You know, we run the financials, we run the fundamental analytics, and it looks like it's good, looks like it's got growth and whatever. We got research departments we go through. Anyway, make a long story short, that'd be 100% bull sentiment index theoretically. It's a little more complicated than this, but so if you've got of 10 research firms, you got 6 saying we think it's got 60%, okay, bull sentiment index. Well, we have a rule. Okay. And our rule is this, and I would look at this and, you know, when you're doing fun stuff, you're out here trading different, you know, hot issues and trends. I would at least look bull sentiment index. We will not take a position in an investment if it's anywhere, if it's got to be between 30% and 70. Well, why is that? Well, 70 to 30 kind of gives us that means that it's got institutional support, but I would argue is an indicator that it's not overbought. And that's an investment term. When something gets so high and there's overbought situations technically and oversold. And anything that is over 70, we would argue is in an overbought position potentially. So it may be a great investment, but bull sentiment is 82. We would pass. We'd wait. We'd hold it in cash. Well, why is that, Russ? Well, history's proven that it's kind of like this. Billy, you and I are supposed to be at a party at 8:00. And we mess around, we get busy doing other stuff, and we go to that party Saturday night, and it's 9:45. We figure everybody will still be around. But when we get there, all the drinks been drunk, all the chips have been eaten, all the dip's gone. You with me? We're kind of late to the party, right? So we came on, hey, where's Fred? Well, Fred's gone. We thought Fred was gone. Well, he was here, but he left. Band's getting tired. They're taking longer breaks. You see where I'm going? We've been better off probably to stay at the house, do something different, and wait till the next party and try to be there on time. Right. Okay, maybe that's not the greatest analogy in the world.
Makes sense.
But it you know, we want it to have at least 30% bull sentiment index because that's an indication of institutional sponsorship. But we don't want to be the 12th man on the deal team last to be there. So that's just one of 4, and there's different, in each one, we got different things that we do. And I'll tell you this, and I don't mean to be, you know, the problem that people have is they watch CNBC or Fox News for a little while and they decide, hey man, I know I can do this. And they think about something and then they find out it went up a little bit. I knew I should have done that.
Right.
Well, here's the thing. Okay. And this is what, and I believe this, I'm not trying to be, believe me, I'm not trying to be, but you guys get up every day and you're out here either selling cars or doing your business or running your hardware store or operating your plant. And you think Russ sitting over there 5 or 6 hours a day, getting up at 5:30 in the morning and reading my reports. You think you're going to beat me over time?
Right.
Now you might, but the chances are, look, I don't know anything about the car business. I don't know anything about operating or doing a farm, but I do know what I do.
Yeah. Yeah. I want to speak to that. So look, I watch those shows also, and not that there's not some smart people on there, but their job is to get viewers.
That's right.
Okay. So they have to say things that's going to cause people to watch. They say things like, one show, I'm not going to call their name. They say that, okay, this person has a 1-hour show and they say that, you know, money's being made in the market. And they say, I want to tell it where it makes sense to you. She says, money's being made in the market and my job is to help you make money. You can't watch that show for an hour a day and use what she's talking about to make money. Money's being made in the market. But here's a fact. There's a whole lot of money being lost in the market too.
That's right.
There's a lot of it's being lost. So, you know, listening to somebody who's trying to have a 1-hour show to get ratings is not a good financial plan.
Well, I mean, there's so many of them. I've watched them on and off, and you listen to this guy today, you just tune back in next week, he's saying something totally opposite.
Yeah.
And I mean, it's just whatever the trend is, he's going to try to reinforce it to encourage people to tune in so that he can get ratings. So his, CNBC can sell more ads. So, I mean,
I want to ask you about something because I spend too much time trying to figure out what's going on in the market and what's going on with stocks. I like to know things. I'm very curious. So I get in there, but I mean, I'm not an investor by trade and I don't want to be, but I do want to know, I want to be able to talk to you about the money that you hold for me. So explain to me this, the bond market. Okay. You have bonds. So first of all, what is a bond?
A bond is I call it a loanership investment. I would argue that if you've got some money and you spend it, then guess what? You don't have a conversation about where to invest it or where to put it. If you're going to put money in savings, you're going to put it either in a loanership investment or what I call an ownership investment. Okay. And we can get into that, but a bond is where I have some money. It's kind of like a CD. If I go down to the bank and I say, Mr. Banker, I got some money. How much you got? I got $50,000. Okay. Well, you need my super CD. And so you loan him that $50,000. He's going to use it. He's going to pay you interest for 6 months. That's 6 month CD. 1 year. It's a 1 year CD, whatever. And then he pays you your money back. A lot of people don't look at, well, I went in and I bought a CD. You really didn't buy anything. You entered into a contract with the bank. You loaned them your money and they're going to use it and pay you back at a certain point in time. Their FDI insurance is safe. It's okay, whatever. A bond is just like loaning your money instead of a CD to the bank. That's when I'm loaning my money to the bank. Let's say you buy a corporate bond. Well, let's say Walmart wants to borrow some money because they're going to expand, whatever. Well, you can loan your money to Walmart by buying a bond. And a bond is just a contractual obligation. It's an ownership investment where I loan my money to Walmart under contract. Okay. They're going to pay me X amount of interest for a period of time, and then they're going to pay me back. It'll mature.
Okay. So when you hear them talking about government bonds and like right now, the 10-year, okay, the 10-year and the bond yield. So it's complicated to me. And I feel like I'm pretty smart, but what is a 10-year and what's the correlation to a 10-year and the yield?
Okay. Yeah, that's a good question. Well, a 10-year, I mean, theoretically, these bond rates are set like, okay, U.S. Treasury, 10-year Treasury is typically looked at, okay, well, that's kind of the baseline for a safe investment. So a lot of different investments may be tied to the 10-year, to the LIBOR. Okay. Different bonds currently, the market price is tied to interest rates. So right now, bonds, U.S. government bonds, 10-year Treasury is very low, and it's not as low as it was. It's up 50, 60% and not in just a little while, but I mean, it's still nothing. Because it's probably right now, I don't know, 140, something like that. I don't know what it is.
That's close. I heard that it's been in that range for sure. So,
yeah. I mean, 2 years ago it was, and it was probably 80 basis points. Now, who would make an investment and say, I'm going to loan you my money and you're going to pay me less, or you're going to pay me 1%? Right. Okay. That'd be a hard thing to do, to tie money up for 10 years. So the only reason people are buying treasuries, it's a reflection of the desire for safety. And people are certainly concerned a lot with the different risks out here, global and economic.
So theoretically, they're not going to lose that money if they put it in the 10-year Treasury at 1% or whatever it was.
Exactly.
Okay. But now a lot of people there's trillions of dollars in the bonds, in the bond market, right? What is the concern when you hear Warren Buffett said the other day that recently that bond investors are looking rough road ahead or whatever? Like, who is a bond investor? Why would somebody be a bond investor, even though?
Well, I think this is, yeah. I mean, when you try to, nobody knows, next week, next month, next year. I mean, but based on what we know now, I would certainly agree with that. I mean, bonds are the largest by far, the largest investment market in the world.
Really?
Oh, it's huge. And what happens is people use those they buy and sell. But here's the problem that we see going forward. And I'm sure this is what Mr. Buffett was talking about. If interest rates and inflation, see, I would argue two things are going to happen that we can kind of, look, Martians could land tomorrow and all this is off. Okay. Some, existential event could occur and us not. But the reality is, we got an economy on steroids. And one of the ways the Treasury is going to combat rising prices is by raising interest rates. Part of the problem is if you have a bond, it's kind of like a seesaw. I'm going to do it like this where you can see me on the camera. There we go. So you have a coupon rate, but once you lock in that bond price, it's going to pay that amount. Well, the problem is in a rising interest rate environment, it's like a seesaw. The other end goes down. The value of that investment, the value of that bond actually goes down on the market. Why?
Okay.
Because it has to price itself so that the yield will be market rate. So if you go out here right now and buy a 30-year bond, I would think you're crazy.
Right.
Because, interest rates, how much they might go down, but how much can they go down? So we only got one. Well, yeah, Russ, but in the next 10 years, we're probably looking at still a deflationary situation. Let me tell you what, based on what I understand, okay, and I'm not an economics professor, but I do understand we have an economy on steroids. We have artificially suppressed interest rates. We're doing that to keep the economy stimulated. If interest rates go up with the national debt we've got, excuse me, we got an issue here. Now we're going to really have some. So, you don't want to have bonds, in my opinion, or long-term bonds. I think the downside is certainly outweighs the upside. Okay. In a lot of ways.
I think I agree. I think I'm still trying to totally understand it. So when they talk about the yield at is it the yield that's at 1.4, 1.5% now? What? Okay. So why is that a bad thing for bonds? Why wouldn't that be a good thing?
Well, the problem is if you go out here and you buy a 10-year bond and 5 years from now, the interest rate's 4%.
Okay.
See, now you're still drawing your 1.3 or whatever it is, and everybody else, and you locked in. Well, you say, well, what am I going to do? I want to get out of this. Well, okay, you can take a discount. You can take a loss on your bond.
That's what I was looking for there. Okay, now I understand.
So those things are priced every day. They fluctuate.
So as interest rates go up, the bond yield will go up.
The market bond, in other words, new ones that you can go out and buy have gone up.
Right.
But the one that you hold, it's got a coupon.
Right.
So whatever you bought that coupon, that's what it's going to pay.
Okay, I got you. So the new bonds is as interest rates rise.
That's right.
The new bonds that you can buy, your return will be greater. But if you're stuck over here with a 1% bond,
right,
your money's dead till that contract's up, or you have to take a tremendous discount.
Exactly. You lose it away.
A huge discount to get somebody to buy your 1% bond.
That's right.
Okay.
Because what you're actually having to do, and the reason the price goes down, and you say, well, I hold it, I won't lose my money. Yeah. But everybody else getting 4% and you're getting 1.3, and that's not cool. Yeah, no, that's not cool at all. That's what I've been looking for. I've been trying to figure that out when I hear people talk about rising interest rates. So let's talk about one other thing. With rising rates and inflation, the whole I understand. I'm not saying that I got it or that I'm savvy with it, but I understand the idea of inflation and the value of gold rising. And actually, I think I understand the value. It's not really as the dollar decreases in value, which it has for a long, long time. It's going to continue probably. I mean, it is a fiat currency. Dollar may be strong against other fiat currencies, but against a solid asset like a real estate or a gold or something that really has intrinsic value, that dollar is not going to start increasing in value over the long period of time versus a real asset. However, even though that makes logical sense, if you bought gold at $2,000 an ounce
6 months ago
Yeah.
or 4 months ago.
Mhm.
In the last 4 months, the dollar has increased in value versus that ounce of gold.
Exactly.
So trying to time the market is a dumb man's game.
Well, it's tough. Yeah, I agree.
Yeah.
Sometimes you just got to ride it out.
Yeah.
Now, but you to do that, you need to have a lot of confidence in your portfolio theory. I mean, we can sit here and talk about some things that I know you're probably not listening, people are not talking about, especially, people that are interested in trading. But all the time, this busy stuff's going on. There's some things that are real trends that are happening. Mm-hmm. Number one, you look at natural gas. And natural gas right now, I think the demand was as high as it's ever been this last go around. And a lot of these companies are beginning to do very well as a sector. Mm-hmm. So that's one of the things you say, well, Russ, how would you do things? Well, I'm looking at real stuff. Okay. Mm-hmm. So the natural gas looks attractive from a sector right now. We're looking real closely at that. Another is the financial companies. Usually at this time in the investment cycle and the economic cycle, banks and financial companies do very well. Mm-hmm. So that's another area. And also Japan's been asleep for a while. Mm-hmm. So we're looking at that.
Hey, so I know you know about this, but you know what so few people know about is the cities and the growth in the economy of these countries, including China, of course, the biggest, which, their economy is growing, could be bigger than the United States economy. But there are cities, Shenzhen, I think is one of them, mm-hmm. that is more modern. It makes New York City and Atlanta and Los Angeles, and it makes them look like something from the 50s or 30s, because that's when a lot of our cities were built. These cities are modern.
Yeah.
They have, if you think about the most modern building in New York, which is the new Trade Center, the Freedom Tower, I think, that's very modern. It doesn't get any better than that, but we have one. You go to China, you go to Shenzhen, and there's thousands of those buildings. So those emerging markets, that we Americans ignore or don't even know about, somebody who's aware of those things and knows how to invest in those would definitely be ahead of the Robinhood day trader.
Well, I think on time, I mean, we're going to be, good, solid, look, helping my clients to accumulate opportunities and not chase trends. Mm-hmm. Because, we're human too. We watch this, me as a financial advisor, I'm sitting there and I'm looking, but it's, that served me well over the years. We have been very fortunate not to get caught up in some of the hype that everybody wants. I mean, look, everybody wants to.
Absolutely.
I mean, I don't want to get rich quick.
Yeah. Yeah.
If I can, but I'd encourage you, if you're out there and you got a little money, just, invest those amount that you don't want to lose.
Yep.
In those types.
Yeah. That's speculation.
If you can't afford to lose it, stay away from it.
So Smith, young, smart guy. He's doing better now than he ever has with his income and with his investments, right? And he listens to me, and I tell him, get in something that's going to be valuable in 5 or 10 years, get some money built up, and then take it to an institutional advisor when he has some money. So what do you say to somebody who's out there who's first of all, I hate to ask it like this, but how much money do you have to get your help?
Well, I mean, as a general rule, we don't. It's tough. The way I put it this way, our advisory models aren't really designed for an account less than $100,000. We've got 5 models. Each one of them, we manage them with a little different approach. Each approach has been successful historically, but we know that depending on kind of what's going on in the markets and this kind of thing, one strategy is going to usually do a little better than another. So now my growth strategy is my favorite. Okay. But I figured out a way, if somebody's got $40,000 or $50,000 and they want to let's go in the advisory, I figured out how we can do that. So,
right. So with these young guys, first of all, I want to say this: there's no such thing as a non-commissioned trade, or like when Robinhood and TD, they're giving you commission free trades, but that doesn't mean that it's the least expensive way to buy a stock. First of all,
True. I agree with that.
Yeah. But they are taking advantage. They're using these tools. I think if you're smart, these tools are smart, your TDs and your Robinhoods. And how would you recommend for Smith to accumulate that $30,000 or $40,000 as quickly and safely as possible before he has professional help?
Well, probably there's some mutual funds they're diversified enough to help him to get some, to help him reduce some risk. There's also ETFs.
Mm-hmm.
ETFs are very attractive. And I've got some ideas I'll share with you, Smith, if you want.
Yeah.
But you can buy those, and then of course, if you have a situation, you got to have some money, you can just sell like a stock.
Mm-hmm.
But it'll give you some diversification, so you can pay attention to, another thing about buying individual stocks, it's fun there till you get bit a little bit, and then it's not quite as fun. The other thing is the amount of time that it sucks.
Mm-hmm.
I mean, a lot of times, and I know I'm going to say this, and I know but we're going to be hard to beat over time.
Oh, no doubt.
You might whip me yesterday,
Mm-hmm.
but over the next 5 years, good luck, because I mean, we this is what we do. But
yeah, you're not going to have the foresight. Some people did. They had the foresight to go all in on Apple 10 years ago, right? I mean, you did well if you did that.
Yeah, you did really well. Yeah.
But how many people really did that? They didn't. They did that, and then they were also jumping around and on these other stocks that are
there's
down.
I mean, there's tons of, like I say, there's always a hot thing out there.
There is.
But
now I personally, I see a shiny object and I try, it excites me. It gets me, thinking and wanting to do things. And I have developed the discipline. This is what I invest in. I invest in myself. I invested in myself for a long time, learning some skills, learning some strategies, and putting those things to work to generate income. My building, my equipment, my people, my software and things like that. And then so I focus on increasing my income as much as I can. And then once I have a surplus, which I do now, of course, you get that every year. We max out my individual retirement plan. Are there plans out there for entrepreneurs to maximize their income or their retirement and reduce their? I know the answer to this because I'm in it. But what are some thoughts that an entrepreneur or a salesperson that has a big income may want to or needs to consider?
Well, there's different types of plans. There's something called a solo 401k. If you get a 1099, those are kind of attractive right now. There's a lot of different things you can look at. And one of the things that I've heard, not so much lately, but when you sit down and you start looking at how much the tax man gets, I mean, it's gotten to the point where it's just, man, they are just tearing us up.
Probably not going to get better in the next 4 years either.
And I don't think it is, because we've got, you look at our actual income tax rates, but it isn't just income. I mean, property tax and personal property tax, and I got a bill I got to pay for computers in the I mean, you know what I'm saying?
Yes.
It's crazy.
It's crazy.
I mean, it's like it never ends, and I don't know that it ever will. But my point is this: we live in an after-tax world, and if you don't take, I had an old guy tell me one time, he's very successful, he's a client, and he said to me, he said, "You know what, Russ? Looking back, he always, several mistakes I wish I'd done different, yada yada." He said, "But one of the things I wish I'd done is I wish I took one day every 2 weeks, took off work, closed myself up in a room, and tried to figure out ways to reduce and manage my tax."
Mm-hmm. I think that's a wonderful idea. As a matter of fact, I probably, because of the insane amount of taxes I had to pay in 2018, 19, and I'm going to have to pay for 20, I probably spend at least 8 hours a week looking at and
ways to reduce that bill.
And sometimes I made some mistakes trying to reduce taxes, because if you don't need it, you don't need to buy it, regardless of, you don't need to take a tax deduction for a tax deduction. You'd be better off, putting in a growth model and
that's right.
And finding a way, increasing your income so you have more money to pay the tax with. A tax deduction just for a tax deduction is a dumb thing. That's kind of, people say, do you need a tax write-off? Well, no, you don't need a tax write-off. There's no such thing as, I need to spend some money. You don't spend the money to save taxes.
No, but managing and trying to figure out how net.
Yeah.
And one of the things that I hear people say, the government's going to get their tax and nothing I can do. I disagree with that. I see people over and over and over. Look, I've got a client of mine who is now he's 56. When he was 54 years old, he retired. He was able to, now he had a lot of things going on and a lot of people don't have. He didn't inherit a bunch of money. He worked, he had a plan. He'd been my client for well over 20, I'd say probably 24, 25 years. But, it's a cool thing to see everything kind of come together and him be able to do kind of what he planned and set out to do. And he didn't kill himself to do it. But one of the things he did do is he took advantage of the company programs that were available to him. And he took advantage every time he could to reduce and try to manage the tax liability, not only during his working time, but also now that he's not. And, if you let somebody convince you that there's not a way that you can help yourself by trying and putting together some things like a qualified plan or even some non-qualified different things that are available, then you're missing out. That's not a good thing. You're missing the boat. I'm telling you.
So what advice would you have? Because we all are different. I'm an income guy. I'm like increase the income. But I'm also, that I have a high risk tolerance. So I'm okay. That's what we were talking about before we got started. So let's segue this, Smith. Let's talk about what you and I were talking about before Russ got on here. And a lot of people say it takes money to make money. My comment to that was, no, it doesn't. It doesn't take money to make money because if you never have money, it takes courage. So, first of all, it takes effort, right? So it takes labor. Labor creates money, and then once you have some money, you can invest it. Maybe possibly you get smart with it. But like if you want to make big money in an entrepreneurship, you have to be willing to take risks. Everybody doesn't think like me. And they don't have the same risk tolerance. So someone who is an employee who's climbing either the corporate ladder or climbing, in that warehouse, in that small business where, maybe they want to be a manager, they want to increase their income over a 30-year period, whatever. What advice do you have to that person to maximize their retirement? Because when we're all going to get older, right? At 65, maybe whatever that maybe Social Security will help us. But to take control of your own future? What's some practical things that someone can do who's not counting on, I'm going to get that $1 million, that $2 million, that $10 million company? What's some basic strategies that someone could use?
Well, first of all, I think you should make an assessment of the opportunities that are available to you. Okay. So if you're working for a company and they got a 401k plan and they say, hey, look, we'll put in, if you'll put in money, we'll do a match. So if you put in 6% of your salary, we'll put in 6% of your salary. If you're not maxing that out or right now trying to figure out a way to do that, then you're missing the boat. I mean, this is huge. What you're doing is basically turning down a 12% pay raise in the example I just gave you. So one of the things you need to do is certainly take advantages of the opportunities when they arise. And certainly there's tons of folks out there that work for companies that have 401ks that are willing to match them. And they ain't putting any money in. Why aren't you doing it? I don't know. My cigarettes have gone up, whatever. Come on, man.
Yeah.
Don't leave that money on the table.
Right.
And then when you get a little money, okay, don't go try to eat it up all at one time. You run out here and you say, hey man, I got 10 grand over here. I've been wanting your deer rifle. No. I mean, you've got to figure out a way to segregate, fund money savings from long-term, because I'm going to tell you what, here's the unfortunate reality. And you say, well, I don't want to think that hard about it. Well, then you need to wake up and smell some coffee, because it's either you at work, getting up every day, going down there, punching that clock, going home at whatever time they let you go home, and I can't take a vacation, whatever. It's either you at work or it's your money at work. It's all about income, brother. It's about, you're talking about, it's either income now or income later.
Mm-hmm.
And my clients fall into one or two categories. Now, you would be amazed at how much we send out in monthly income to our retired clients. But it's either grow the money to maximize the income down the road, or Russ, I've got this amount of money from my work. I want to roll this over and I'm gonna start drawing an income stream. But it's either, I wish there was a shortcut.
Yeah.
I wish there was a way, but it's either, so take advantage. That's number one. Number two, don't be crazy with it. There's different investments inside of a 401k and inside of a qualified retirement plan. Do the best you can with what you've got. And look, I'm not going to, if somebody's trying to help themselves and they contact me and I can be of any service, I'm going to do it.
Right. You're
not going to get a bill if you call Russ and say, hey, Russ, here's my situation. Okay. You might get a bill later if we have to go and do, but I don't want people to think that I'm going to bite them, or that there's some, and if I can help, and look,
Yeah, absolutely. I mean,
if I can help out and I can't, you say, well, he's full of whatever. Okay. Well, you hadn't cost you anything.
Yeah, no doubt about it. You've helped me a lot. And a lot of the things you helped me with, I did not get a bill for. The only bill I've ever gotten from you is for, the work to invest my money. And I strongly recommend that. Let's talk about, first of all, Smith. What it sounded to me like what Russ was saying there is you got to have some discipline. Right.
Yes.
And some people have more discipline. I think discipline is a good thing, and that you can always improve. When you make a mistake, forget about it, move on. It's hard for some people to lose money, and it just crushes them. And I think that's going to happen, man. If we have a big correction and all these people are in these retail stocks, with their commission-free trades, they have a huge correction and you lose a lot of your savings or a lot of your investment money. They're just going to not want to get back in there. And that's going to be bad for them. But Smith, what was your money saving tip that you talked about earlier? What can someone do to save some money? Because I got a new slogan. It's all about income, brother. That's what Russ just told.
It's all about is either income now, income later.
Yeah. So I like that. What can we do, Smith, to increase our income?
To increase your income?
Well, no, it's the same. It's what I'm saying
thing.
It's all about income. So what your suggestion is actually an increase in someone's income later. So if they can save money now and stick that into an investment, a smart investment, then that's going to be income in the future. So it's the same thing. What's that money saving tip?
Yes, sir. That is Audit your paid subscriptions annually. Hopefully monthly would probably be better. Just go through, get a printout of all the things that you're constantly paying for every month, whether it's video services, Amazon Prime.
That's
maybe it's a video game sub. Who knows? It could be all sorts of stuff.
Idea.
I give Smith and Paul a hard time, right? Like I never want to take advice from somebody who hasn't already done what I'm trying to do. So usually I think I should be giving them advice on the money situation.
That's right.
But this is a dang good one, man. I have an Amazon Prime account. And April has an Amazon Prime account, and the family plan, that would be free. So if that's $15, $19, or however much it is, not $19
adds up.
Man, it adds up.
Yeah.
I have a credit card that I haven't used in, I don't know, a couple of years, but they charge me $8 a month. You know what I'm saying? I hate that I'm going to do it because here's something. If you close a credit card account, your credit score will drop a little bit, and that's unfortunate, but I'm going to do it to save that money. It'll go right back up.
Yeah, it is unfortunate.
It is unfortunate. I get notifications in my email that I paid $9.99 for something on Apple iTunes. I'm not sure what it is, but I guarantee you, if I looked hard enough in a good audit like Smith's talking about, I can come up with $100 a month of stuff I'm paying for that I'm not using.
Yeah, you know what? I'm gonna go back. That's a good point. I'm gonna do that. Smith, what isn't there a website that'll do that, or an app?
I'm actually not sure.
I thought there was an app that would like look at all your recurring stuff, or maybe not.
I'm sure it exists. I haven't looked that far into it, but I'm sure most people would find something redundant. I mean, if you're paying for DirecTV and you've got 3 or 4 video subscription services, you probably don't need them all.
That's right. I know we got to wrap this thing up. I want you to explain to our viewers, and here's what we're going to do for you. I don't know if we did it last time or not, Russ, but now that we have the new studio, we're going to break this thing up. We're going to find some 60 to 3 minute, 60 second to 3 minute clips, maybe 5 minutes of something that's valuable. Send that to you where you can put it on your different sites as well.
That's awesome. Yeah.
And I think that'll help you get some attention. We need to get your message out there to as many people as we can in these 11 states that you're actually licensed in. But I want you to explain to me and our viewers of why a free or a commission-free trade may not be your best option.
Well, last Thursday, I was on the telephone with a management firm. They're a third-party money manager, and we were talking about different structures and what they cost and this type of thing. And he says, now, you understand, Russ, if you use one of these 4 different models and have the money invested, then we don't charge a fee. I said, wait a minute. How is it you don't charge? I knew the answer. But I said, how is it you don't charge a fee? I mean, you guys are doing a wonderful job, it looks like, if you go back over the last 10 years of their track record. And certainly you could charge a fee, but why are you telling me you're not charging a fee? Well, we just went to that about 6 months ago. We were charging 35 basis points. Well, 35 basis points, about a little more than 1/4%. Basis point is, 1/100th of a percent. So 35 basis points is a little over 1/4%. You figure they've got billions of dollars under management. That's a lot of money. How can they do it for free? Nobody can work for free. Well, what they've doing is they've got their own trading platform now, and basically they're operating as a mutual fund. And so the trades are made in that. They make money. That's where they're deriving their fees. So I can't tell a client, nor would I ever, that they're not paying anything for this. And I don't really particularly like that arrangement.
Right.
I mean, I like disclosure. I think
it's a hidden fee is what
it is. I think disclosure is your friend. Okay. And while it might not, but okay. So they obviously shifted the money they're making. Okay. So now you think how much does Robinhood charge to make a stock trade?
Well, they say it's free.
they say it's free. So if they got stock, they're privately held.
They are privately held.
Yeah. So, but those guys are just doing it for fun. No. What they're doing is there's always there's a difference between a bid and an ask price when it comes to a security. If you're paying me and you're paying a commission, then what we're bound to do by FINRA standards is execute your buy or sell trade at the best possible price.
Right.
They're not.
Right. Yeah. So that can be way more than a $9.90, or then it can be a huge amount of what that bid and ask price is.
Look, we're going to tell you, we're going to disclose it. It is what it is. And, if you feel better, if it somehow makes you happy that you think you're getting something for free, that's fine too.
There's no free lunch.
We're going to charge you. Okay. We have to stay in business,
but you're going to disclose what it is.
And we're going to tell you what it is. I mean, I don't think we'll ever charge somebody anything unless they know what it's going to be up front. And if it's not a fair arrangement, then, they can do something different.
Yep. And I'm all about getting educated and getting people into the market. I think it's a wonderful thing. And I just want to go back and make sure everyone understands you need to be investing for the long haul. Investing is different than speculating, at least a little bit. Every investment's a little bit of a speculation because you can't see the future.
Well, I'd say it's huge, but anyway, I think, because there's a lot of things you can look at and just say, or versus trying to figure out which one of these is gonna. Look, let's go back. Let's talk about it. I want to, and I'm gonna get my dates wrong, but I think this is kind of cool. This is good. I'm glad you brought it up. Let's go back in a time machine and let's look at like 1915 or whenever. You know how many car dealers? You know how many car companies were out there?
I got this wrong the first time I was asked this because I didn't realize that there were so many car companies.
Yeah, it's crazy. It was like 400 and something. It's a ton. Mm-hmm. So, if you were back there, you said, well, man, you should have invested in an automobile business. You knew it was going to be going great guns. Well, people that are on the ground are looking around and they don't know whether Edsel or, whatever this one is or whatever. They all got, some of these but there were 2 companies that made tires.
Really?
So everybody gets hopped up on which automobile manufacturer is going to have the most chrome on it and have problem. We probably could have bought some investments in both tire companies.
Yep.
So, what I try to do is figure out, we know 5G is happening, but instead of trying to figure out which one of these companies is going to be selling the hottest cell phone or have the chip that this one's going to decide to go with and all that, let's just invest in the infrastructure. We know their revenues are going to go up.
Yeah.
So that's my point. You can try and say, well, okay, I'm going to pick the hot whatever, or you can kind of back up from things and do kind of what we do. And that's try to take what we believe is a much safer approach to get, look, man, I can share with you some return numbers that are pretty impressive and we're kind of boring. Okay.
Yeah. Hey, boring's good when it comes to, that not losing money is very important. It's same theory as the gold rush and investing in a gold mine and doing all that hard work, or the guy who sold the picks,
shovels,
right? The shovels and picks.
And
that is, and somewhat the way my business model is set up. There's 17,000, 18,000 new car franchises, and they make a lot of money. And I could go out and invest in, if I could get a franchise and have all the millions of dollars of inventory and the millions of dollars of real estate that it takes to do all that. Or I could just simply help them with what my specialty is, which is the advertising and marketing, creating engagement and appointments. And I don't have that huge investment, but I get to make money off of the 1,000 or 2,000 dealers that I serve. So
awesome.
Finding that niche or finding that strategy is the proper word.
That's right.
You don't have to buy you don't have to find all the companies that work if you have a strategy that is already looking for that and out there.
And, based on our discipline, you're talking about the way that we'll probably, I'm not saying never, but chances of us holding Tesla in the growth model, probably pretty slim.
Yeah.
Because the risk management overlay that we use is going to have a hard time with that.
There's some boring names in my portfolio that I hold with you. There's some boring names in there, but like there's risk in anything, but every time I log in there, there's a little bit more money. That's what I care about.
That's right. That's the bottom line.
That's the bottom line.
That's good testimony.
This is the Monday Morning Money Show. It's already the afternoon, so we're going to get out of here. Russ Story is a financial advisor. Smith has something he wants to mention.
Yeah, I wanted to make sure I actually could remember at least one of these, and there are alternatives, obviously, as always, so do your own due diligence, but Mint is one spending tracker or budget app that I've heard a lot of people talk good things about.
Okay.
There's obviously more.
Mint.
Do your own research, but yes,
Mint. So
good things about
don't want to leave this out. The most important thing from today's show is understand the difference between an investment and a speculation, and put 99% of your investment money into the investment and leave the 1% for the speculation. The second most important thing of the show is track your spending on paid apps. Is that correct, Smith?
Yes, sir.
Paid apps. Get rid of the ones you don't need. There's money there, and you can put that money into something. Accumulate you a nest egg. We didn't even use that word today. And then you get you a big enough nest egg, and you can put that money to work for you, and you can actually see it working. There's nothing better than money working for you.
Oh, pretty cool.
Today's guest was Russ Story, expert and financial advisor. If you want to get a hold of Russ, just find him on Facebook. Search his name right there, Russ Story. He'll message you back, I promise. We'll see you guys tomorrow for another sales